Hey, Wall Street winners, Courtney Smith here with our February 14th edition of Wall Street Winners. Let's dive right in. This is the most, well, it's actually not that important. Okay, so Friday's, what I told you for weeks now is that we would bottom here, we would rally up into this zone, which we did. I thought that maybe this was the start of the second leg, but actually Friday was the start of the second leg. You can see we came up here, made a double top, broke that. The first downside objective is right about here, but the real downside objective is the old lows. So we're now starting really what is really probably the second major leg of this bear market, and it is a bear market. There's no question about that. We can see here that you have to go back all the way into mid-January here in the upper right-hand corner to see a time period when buying pressure, which is the little green line, was greater than selling pressure. And here in the last week, selling pressure shot up a bit, buying pressure shot down a bit. Over here in the NASDAQ, once again, the same double top, much weaker. If this was the S&P, we would have wanted to see a rally up into this area, but we didn't see that. We only saw a rally to the previous lows. So that's weaker than normal. However, the purple predictor is quite strong here in the NASDAQ. It's not in the Dow and the S&P. So that is one sign of hope over here that this big dip that we've already seen in the NASDAQ, we're seeing the smart money step in and buy. Seasonality, both neutral, not even close to doing anything. Now, this is interesting. So the two lines that I've been following are the two at the bottom here. Second year of a new Democratic president. That's the red line. And Democratic president midterm, that's the little purple line here. It looks as though the red line is actually the one that is most closely following current price action. So that would suggest another few weeks, maybe one more week, and we'll then start to make a nice 2-month rally, okay? So everybody's going to get all panicky, big bear market, everything is awful. Then Jerome Powell comes out and says, well, maybe just 2 rate hikes this year, not 3 or 4, the way the market is now thinking. And we embark on a stronger stock market. But then the biggest dip of the year will then take place here. So this is what we're following. The purple line is basically the same line, except not as extreme on the downside. But so far, if you look over here to the right-hand side, right now we're supposed to be down about 1%, but we're actually down off the bottom of the chart. So we have to take the more bearish of the two lines, which is the red line. Not pretty. Asset allocation, late in the month, late in the week, I should say, we saw a lot of money come out of the stock market and back into the bond market. Why? You can get 2% on a 10-year now. We haven't seen 2% for years on the 10-year note. So now we're starting to see the bonds compete with the stock market. Stock market risk indicator also, we had seen some strength early in the week, but now they're saying, nah, forget it. We like bonds. We like boring stocks. And so guess where our portfolio is? Yes, that's right. It's in boring stocks, but are making money for us. So that's all that matters. Global shares took a dive on Thursday, continued it on Friday. Okay, so the yield curve remains pretty stable. We had a little bit of an increase here, and then late in the week, we saw it give up that. You can see down here in the lower left-hand corner, the yield curve is pretty sharply positive at the front end of the yield curve, but out on the back end, once we get to about 2 years, it's pretty flat. This is getting more and more bearish, more and more bearish. So bonds were down sharply until Friday. Now here is something interesting that happened. The stock market has been taking a dive now for a couple months. So has the bond market. But all of a sudden on Friday, we see a sharp rise in the bond market. And I think it was people are starting to panic a little on the downside. And so there was a flight to quality. They said, well, let's just go to the safety of bonds. That drop on Friday really rattled people. Look at the heavy volume as well. So big update on heavy volume is actually pretty strong. Panic buying, panic buying. Now we're going to come back to this flight to quality in a few minutes. Bond key factors, all bullish. Hello. We got to see bond prices start to go back, bond yields to go down. I'm sorry, I'll get this right. Bond yields should start to go down again. Dollar, not much of anything there. Now look at gold did the same thing that bonds did. Spike up on a flight to quality, on panic. We're going into the weekend. Is Ukraine going to get invaded? The stock market's collapsing. Let's go buy some gold. But then look, it closed all the way down here. It's actually in the lower half of the range, although realistically it's in the middle of the range, which means the sellers came in and smacked it down. So this is not anywhere near as strong as the bonds, but it does represent some type of flight to quality. Our gold key indicators are neutral. One down, one up, one sideways. So we got to just stand on the sidelines in gold. But crude oil took off, although there was some selling late in the day. This is still going to $100. I mean, unbelievable. The problem is simply this. OPEC Plus comes out and says, well, we're going to increase the number of barrels by 400,000 per month. But then they don't do it. And it's not that the Saudis can't do it. They can. But countries like Venezuela, Mexico, Libya, Iran are all declining in production. And as a result, when we look at OPEC Plus in toto, it can't produce that much. So the demand is still going up, but the supply is not keeping pace with the demand. Bitcoin. Now, we saw just a little bit of a dip in Bitcoin. The purple predictor came down a little bit harder, saying that maybe the smart money is taking profits here. But frankly, it's a little too early to tell. A couple-day price action usually doesn't mean anything, particularly when it was on light volume and they weren't big moves. So we have to say the last few days have been neutral, but now Bitcoin is correlated with the stock market. I just don't want to buy it. It's not a bull market. Let's just sit on the sidelines. All right, freebies. Of course, we just love having you here, but we'd even like it more if you were over in the fully paid up member version. Go to WSW2021.com. The key difference are two major differences. Number one, a lot more analysis, a lot more sophisticated analysis, a lot better analysis, and I show you what's exactly going on. Number two, I give you my specific trade recommendations that I'm putting on in my real account. I share them with you once a week here on Wall Street Winners so you can make money. This newsletter doesn't cost anything because the profits that you should be making will more than pay for the newsletter.